Hey guys, I hope you're having a great day. Welcome to another update. Today we are going to cover very important updates regarding crypto market, so stay tuned. If you are new to the channel, make sure to like the video for our motivation and subscribe to Digital Learning. Turn on the notification bell so you never miss any update. This is not only crypto-related channel, you will also find other useful tutorials on our channel. Without further ado, let's dive into the crypto updates. Following a dovish hint from the Fed, cryptocurrencies have surged, with Bitcoin hitting $114,200 and Ethereum skyrocketing to $4,866, a new all-time high. Fed Chair Jerome Powell's speech at Jackson Hole sparked the crypto spike. Bitcoin leapt to $114,200, and Ethereum battered through resistance to hit $4,866 in intraday gains. Ethereum just hit an all-time high by crossing $4,900 plus, and it may soon touch $5,000. I had already made a video. If you didn't watch this, then click on the I button which is appearing on top right corner of your screen. Investors are now pricing in a September rate cut with over 80% probability. Lower rates typically juice up risk assets like crypto by making speculative investments more appealing. Bitcoin's record highs and Ethereum's comeback are testaments to how closely crypto moves with macro trends. Bitcoin rose 4.2% to about $117,200, while Ethereum's price jumped nearly 14% as markets interpreted Powell's tone as a green light for rate cuts. The rally spread across altcoins, XRP, Solana, Dogecoin, all posted strong gains. Social media buzz around Fed rate cuts could be a red flag for crypto. All the chatter about a possible Fed rate cut might feel exciting, but according to Sentiment, surging social media buzz around this could actually be a danger signal for the market. Analytics platform Sentiment spotted that mentions of the Fed, rate cuts, and Powell on social media have hit a 11-month high. While this excitement aligns with Bitcoin and Ether surging after Powell's dovish speech, Sentiment warns such euphoria may indicate a local price top rather than sustained growth. Why is this a red flag? They explain that when one bullish narrative dominates the conversation, markets can become overheated. Excessive hype often precedes short-term pullbacks, so even as optimism grows, extreme sentiment may suggest a pause or a reset is coming. On one hand, bullish crypto commentators are calling for a Q4 rally and massive inflows from rate cuts. On the other, analysts like Marcus Thieland urge caution, warning of short-term pressure even if the long-term case remains strong. Sentiment's take, this frothy hype could be a warning signal you shouldn't ignore. So, while the chatter around Fed cuts is heating up, remember, hype can lead to traps. Keep your composure, watch your indicators, and don't let social media hype cloud your judgment. Drop your thoughts in the comments. Are you riding the hype or playing it cool? Solana surges 8.1%. Is the bull run back on? Sol just climbed 8.1% over the last week, signaling renewed bullish momentum. Let's unpack what's fueling this surge and whether this is the launchpad for a stronger run ahead. Solana's outpaced most of the market, rising roughly 8.1% in just 7 days. It broke above the resistance zone and reclaimed the 180 territory, drawing attention from both traders and investors. Technically, things are heating up. Analysts spotted bullish formations like ascending triangles and bullish flags, classic signs of breakout setups. If Sol holds above this area, the momentum could take it towards the $200 to $220 range. Additionally, Sol's reclaim of resistance adds fuel to the bullish thesis. But it's not just charts. Solana's ecosystem strength backs this move. DeFi activity remains robust with TVL and DEX volumes soaring. On-chain usage continues to impress despite broader market stagnation. This combination of technical strength and network fundamentals is rare and powerful. If the buying holds, Sol may target $200 and even $220. Momentum indicators like MACD and RSI still support upward continuation, But don't ignore the risks. Overbought RSI or resistance at $195 to $200 could spark pullbacks or consolidation. Stay alert and trade smart. So, is Solana gearing up for another leg higher? If you're bullish, got your entry lined up yet? Drop your price targets in the comments. BNB, TRX, and Bitcoin lead the pack of most resilient cryptocurrencies. Want to know which cryptocurrencies have stayed strong through the market swings? BNB, TRX, and Bitcoin top the list of today's most resilient digital assets. As per a recent report, BNB, TRX, and Bitcoin are leading the altcoin market in resilience. These crypto assets have held up better than most during this bull cycle, even when broader conditions were rough. Bitcoin, the OG store of value, still the safest and most stable player in crypto. BNB, Binance Coin, trading only about 10% below its previous all-time high. Its blockchain spawns consistent activity, strong developer adoption, tons of dApps, and expanding use cases. TRX, among L1 altcoins, TRX fell the least during market drops, making it a steady performer even under pressure. If you're looking to hedge in volatile markets, these coins serve as a good defensive play or even long-term holds. But always do your own research, as we provide only the best possible market analysis and updates. Bitcoin for its unmatched dominance and solid foundation. BNB for its ecosystem utility and institutional interest. TRX for consistent performance in low drawdowns in turbulent times. The crypto market has seen a massive surge, with a $250 billion added to the total market cap in just the past 24 hours. Let's break down what's driving this incredible move. In the last day, the overall cryptocurrency market cap jumped by $250 billion. This sudden inflow signals renewed investor confidence and possibly large-scale buying from both retail traders and institutions. The biggest drivers? Bitcoin and Ethereum are leading the charge, pushing up strongly as traders anticipate more bullish momentum. Altcoins are following, with projects tied to DeFi, AI, and new blockchain infrastructure gaining traction. On the macro side, optimism around the Federal Reserve's potential rate cuts and the recent approval of crypto-related financial products are fueling market-wide excitement. This kind of capital surge often suggests a shift in sentiment from caution to greed, with traders piling in before they think prices climb higher. But remember, such sharp inflows can also lead to volatility if profit-taking kicks in. Another massive update, Grayscale has officially filed an S1 registration with the SEC for an XRP ETF. This could be a game changer for Ripple and the wider crypto market. So what does this mean? The S1 filing is the first step towards launching a spot ETF, which would allow traditional investors to buy XRP through regular stock exchanges, just like they do with Bitcoin or Ethereum ETFs. If approved, this would open the door for huge institutional money to flow into XRP, since pension funds, hedge funds, and everyday investors could get exposure without having to deal with wallets, exchanges, or crypto custody. However, approval isn't guaranteed. The SEC still needs to review the filing, and given XRP's regulatory history, the process could take time. What do you think? Will the SEC approve this ETF, or could it face the same hurdles we saw in the past? Let me know your thoughts in the comments. The U.S. government now officially owns a 10% stake in Intel, one of the largest semiconductor companies in the world. The U.S. government has been investing heavily in semiconductors and chip manufacturing through programs like the CHIPS Act. Why? Because chips are the backbone of modern technology. Everything from smartphones to artificial intelligence to military defense depend on chips. Now, by taking a 10% ownership stake in Intel, the U.S. government is strengthening domestic chip production to reduce reliance on foreign countries, especially China and Taiwan. Securing national security interests, since semiconductors are critical for defense and cybersecurity. Supporting Intel financially, making sure the company can keep up with global competition, particularly against companies like TSMC and Samsung. For Intel, this means stronger backing, more funding for research and factories, and a huge confidence boost. For the US, it's about making sure the country leads in technology and AI innovation. This move is massive, not just for Intel, but for the entire tech and AI sector. It signals that governments are willing to directly invest in strategic industries to secure the future. What do you think? Will this push help the US dominate the global chip race? Share your thoughts in the comments.
I hope you found this video helpful, and if it does, then show your support by liking this video and subscribing to Digital Learning. I will catch you in next piece of content. Take care. Goodbye.